I truly believe that the equity market sell-off, yeah, it looks scary, but it's not the equity market sell-off in the Chinese market that really makes investors nervous. It's really about the fundamental strengths or weakness of the Chinese economy that makes investors nervous. What really makes the U.S. market jittery and the whole world market jittery is what happened in the last 2 or 3 weeks. There's some economic data coming out signaling that the Chinese economy are doing pretty bad. One index called the PMI index tracks manufacturing activities in China, and it has been showing that the Chinese manufacturing sector has been shrinking, has been contracting. So that sends a very bad signal to the investors that things in Chinese market are really doing bad. The other really interesting observation is that 2 weeks ago, the Chinese government decided to devalue its currency. So that tells investors that the things are really bad. One of the reasons the market is a little bit jittery in the sense that investors do not have a trust on the official GDP growth rate. They may look at it and say, well, gee, the official rate might be 7%, but the real growth rate might be 4%, 5%. So when the investors are not sure what's going on, when they get nervous, but investors should not be too much worried about. Okay, sure, Chinese economy is the second largest economy in the world, but U.S. economy is much bigger, much more diverse, and I don't think weakness in Chinese economy is going to have a huge negative impact on the U.S. unless things really falling off the wells and the Chinese political system starting to become destabilized. If people are not happy, then there's going to be social unrest, political stability. Now, if that happens, that's going to be really ugly. And if we do see something like that happen, it will be dangerous, much dangerous than what we're having now.